Awesome. All right, well, we'll get started then. Thank you, everyone. I'm Michael Sanderson. I'm the director of the Entrepreneurship Center here at St. Mary's University. Really excited to be here. This is our third one of these sessions, and we're going to continue with these almost on a weekly basis, where we're going to bring an expert from the community to come in and share their thoughts on specific topics around the crisis we're facing, how to pivot your companies, and how to move forward. And as always, and I'm sure I'll remind you all at the end of this as well, just as a reminder, one of the services we're offering through the Entrepreneurship Center right now is we partnered with another entrepreneur in residence of ours and have brought in expert coaches from around the world to help companies right now and give you one-on-one advice. So directly through our website, Val, maybe if you want to share to the entire group the link to that, but you can book in directly for a one-on-one session that will deal more in-depthly with maybe the specific problems you're facing. So yeah, if you can help me welcome Gregg Curwin here today. You know, most of you may have heard of Gregg or will know Gregg, but Gregg is a very successful entrepreneur and has run numerous successful companies. And maybe Gregg, I'll give you a few minutes just to do a little 4-second intro of yourself. That's all you have, 4 seconds.
Thanks, Mike. I'm a former St. Mary's student back in the late 80s. I've had a number of businesses. Most of them went well, some didn't. A large one we started 10 years ago, a company called True Leaf that was quite innovative. Indoor farming company. We made a relationship with McCain's, which was really good, and retired about a year ago, and that lasted 2 months. Started a new company in a plant-based beverage, functional beverage for people that are well and unwell, and spend a day a week at the St. Mary's Entrepreneurship Center, but also work with a lot of startups right now, either as an advisor, board, or investor, and yeah, and deeply concerned about our recent situation with COVID, and like a lot of people, hopefully I can help out in any way possible.
Awesome. Thanks, Gregg. And so as a reminder to everyone as well, if you don't mind, if you have questions, just fire them in the chat window. I'll be watching for them as we go through, and we'll make sure that we address everyone's questions before the end of the session. So to start off with, Gregg, you know, the theme here of this particular topic is, you know, finding funding, non-dilutive and dilutive funding in all things considered with the crisis happening. So what do you see, you know, as a person who's received financing before for your various companies, have sold companies, and have done investing yourself? Where do you see what's happening right now in the industry? What advice would you give people? Where's the trends? What's happening when it comes to trying to raise investment for your companies right now?
Yeah, I'm kind of deep into all of it. I mean, our current company, True Leaf, of which our CFO is on this call right now, actually, you know, that's very active in large scale funding, large equity, large debt. My current company, I'm involved with angel investment. I'm helping another company that's more of a seed round. And, you know, pre-COVID, all I could say, it was just a lot of money and great valuations, and it was, you know, kind of the lazy river. It wasn't too difficult, really, for reasonable or above reasonable models. Post-COVID, you know, 3 weeks ago, investors were just in shock. It was kind of like The Walking Dead, and they just didn't know what hit them. And I think as we get going and the dust settles and the markets come back a little bit, you know, it's starting to see the research I'm seeing, and let me preface by saying I spend a lot of my time in the ag tech, food tech, agri-food, health space is kind of my, you know, where I spend my time. And what I see, and I think it involves also extends out to ICT and others, is really we're distilling it down into companies that are for investment that are nice to have and must to have. And there's a big difference. And in the nice to have, honestly, I think it's going to be incredibly difficult. Now, what are nice to haves? I'll leave it to you all to kind of determine what they are. But you know, it's got to be compelling. And the angel money has virtually, to some extent, dried up, but not totally. And I'll touch on that in a second. But What's clearly evident from a capital point of view, and we'll get into non-dilutive and dilutive, is you better have a really compelling model for your startup for some time. There's not going to be a switch. This is going to be a prolonged period. And look, I'm not here to be prescriptive or tell you what to do. I'm just going to share with you what I see, in my opinion, and that's for what it's worth, and the experience that I've seen. But we're living in a world that's as unprecedented. This hasn't happened in forever. So for anybody to say, well, this is where capital is going to go, I think is somewhat. But I can give you my own experience, which I hope represents the region. And I won't spend too much time on what's a nice to have, but a nice to have is, there's a lot of startups I've seen that's just nice, but is it compelling? Is it a must? And if it's not, if it's a nice to have, honestly, to speak the hard truth, then really, is this company that you should just not do? Or is it a company or idea that you should just stick in the freezer for 3 or 4 months, which is probably my recommendation if it's a nice to have. But if you strongly feel that it has legs, then be very, very measured on what you do, and we can talk about that in a moment. On a must to have, clearly there's sectors and opportunities coming out of this COVID issue that are huge. Again, I go back to anything in ag and food. The whole food world completely has been turned on its head, and with that there's some challenges, but it's an incredible space to watch with innovation and online and restaurants, what's going on there, and just the whole space. Anything to do with emergency medicine, emergency response, anything to do with health and wellness, these are must-to-haves, and this is where money is going to find in the ICT space as well. What is a must-to-have? So we'll leave it at that. But it's so that's kind of where I see the space going, Mike. And then if you want me to, I can carry into some questions or what I see around non-dilutive and dilutive capital. Is that?
Yeah, I think that'd be good. It'd be good. I have a follow-up question for something you just asked around, the nice to haves, the must to haves. We see a lot right now. There's a lot of talk. I mean, I don't think I saw the acronym PPE, which is personal protective equipment, prior to the COVID-19, and now you see it everywhere. And because there's a lot of innovative organizations and people in this world, people are looking to launch these companies. Do you think, what's the best advice to the startups looking to launch in the PPE space versus a short and long term, because it's an interesting thing around that.
It is interesting. My 2 cents, and I thought about this the other day, is I think you're going to see an overreaction like you do in most situations like this. So for what I think, you're going to see the pendulum swing really hard to overproduction. I think you're already starting to see data that says that the quote unquote pandemic is not as bad as it appears. I would be ultra cautious, Mike, to your question. If you look at a company like Stanfield's, they had capacity, they were already going, great pivot. You're seeing some great companies locally pivot. But if you're a startup thinking to going into that space, I don't know. I would, unless it was a unique value, I would be really, really careful, because I think there's going to be overproduction.
Yeah. Okay. So yeah, let's go back to the kind of the funding piece around dilutive and non-dilutive. If you said, you looked at angels as potentially drying up, what are the opportunities for companies out there that do still have good ideas, or still seeing a long track, and maybe see themselves as must-haves? What are the opportunities to find the financing that you think?
Well, I think in the non-dilutive, quickly, to be mindful of time, and most of this probably will be repetitive, but with COVID, honestly, it's, if you have a business or looking to start a business, particularly if you have one operationally, it's changing every day with regards to rent, to wage subsidies, to loans. My only recommendation there is just to stay aggressively on top of what's happening provincially and federally. I've had some questions and even leases sent to me to look at regarding what to do. Obviously, these 3-month rent deferral, my only recommendation, having been through tons of leases in my life, I would push for the 3-month deferral, and I would also push that landlord to make sure that they share in the cost. Landlords like to say, well, I'll defer it for 3 months, but I'll add it to the end of the lease. And I think this is a very fluid situation, dynamic situation, unprecedented, and I wouldn't commit to anything until the dust settles, but I would make sure that the landlord is also sharing in the pain, not just the tenant. Um, Obviously, I'm a huge fan of IREP and ACOA. I think they're two of the best organizations in Atlantic Canada that help you get off the ground. And they make you do your homework and your due diligence. So those are two great non-dilutive, consistent, and they bring value to your model. So those are big. Then you start to get into family and friends. You start to get into banks. You start to get into credit unions. I'm a pretty good fan of credit unions. I think regular banks are somewhat interesting. You have your NSBIs if you're exporting. So there's a myriad of government that we don't have the time to go through. Some of the problem in Atlantic Canada, I find there's so many government options that you spend half your time chasing those options and not building a company. But so be careful there. But what I do know from talking to colleagues in the government, federally and provincially, if you've got a startup that you're starting, I think the money available is going to be really tough. Now, if you have a company operational and employees, they will provide what I've heard the word called crutches, which is obviously funding to keep you going and keep your employees retained and hopefully hire and scale. So that's kind of the nugget on the non-dilutive. There's shreds. I mean, there's a, think of it as a pyramid as we talk about this, but if you're operating a business right now, I would just stay aggressively dialed into the government. If you're not operating and looking to start, just really be prepared that it's going to be a very difficult, hard process. Not to say it won't happen, but I think it's going to, the government's acutely focused on keeping, obviously, companies going. On the dilutive side, and this again is open for interpretation, again, pre-COVID, and again, my CFO from TrueLeaf is on this call, Jeff McKinnon, who's deeply involved now and meeting a lot of funds and equity and, heavily into that. And Jeff and I raised a lot of money with TrueLeaf, and I'm in a position where I'm raising money for my next startup. Pre-COVID, there was, again, just a tremendous amount of capital, and there's still a lot of capital. It's just retreated to the sidelines. So if you're starting a startup or you have a new startup, obviously, you go back to, the low-hanging fruit, and I'll take you from kind of the start to maybe a seed or a Series A. And obviously friends and family are always there. Obviously we got the Innovation Equity Tax Credit in Nova Scotia, which I think is incredibly valuable and beneficial. It's very innovative, I think, for angels in Nova Scotia. The angel money has significantly contracted. And I see it loosening as we go week by week, because I'm talking to a lot of angels right now. It is tied up a little bit. Some of the guys I talk to are, waiting to see where the financial markets come back, because they've watched. I spoke to them 3 weeks ago, and they were shell shocked, like everybody. Like the markets were, I don't know how much, by 30-40%. So not to say that the angel money has dried up. There's still a lot of capital. It's just it's going to be very measured as opposed to before. When you get into the seed round and there's a lot of options on the table, what I'm seeing is these VC funds, and particularly the funds, are going to probably retreat a little bit to provide capital to their portfolio companies now. So again, not to say that there's not new investments available. Like everything, you're just going to have to work a little harder and be a little smarter and show the value of your business. Those 2 million plus rounds and getting into a seed or potentially Series A, that's difficult right now, I would say. And Jeff, you're on the call. You're on the front lines of it as well. And you and I have chatted, and they've retreated also. So I think it's a kind of a wait and see. I think the next two to 3 months is still we're in the valley, but I do see every week loosening and getting better. But I do see there's going to be no doubt an investment lag, whoever that is, whether it's an angel or a private equity or a high net worth guy or girl or a fund. There's a lag, and the lag is, what is the new normal? What does it look like? So whether it's 3 months or 4 months or 6 months, there's going to be a lag. And the other thing I want to really feature if you're starting a company or in the middle of it is I think, right now this whole situation is going to be really crappy for valuation. So if you can do whatever you can, and I'm doing this with my current company, is to defer valuation, defer that discussion, then that's critical, because I don't, the valuation discussions pre-COVID versus now are completely different. So that's kind of the, Mike, I hope that's okay, the non-dilutive, dilutive in a very rushed nutshell. But the take-home message is there's still money there. There's still deals to be had. Values are going to be a little tough in the immediate future. There'll be a lag, but hang in there.
And, so on top of that, then for the companies that, have good ideas, maybe they're not must-haves right now. Even if they are, we know the money's, kind of your thoughts are that the money is going to be a little tougher to come by. What are some things that they can do and focus on now that when the money becomes available, because we all know that any downturn in the economy means stimulus the moment that economy starts to turn around, and people will want to spend. What can they do to set themselves apart and prepare themselves for that eventuality when the money comes back online?
That's a really good question, and we live that now with my current company, and because we're kind of in a holding pattern in lieu of what we were doing. But so really, how from a business design perspective, how do you move the needle? So as you're in a bit of a holding pattern, or like a plane in a lineup on a runway, how do you move the needle now, or how do you build value? And there's lots of things that you could put in your toolkit that would apply. Low-hanging fruit are things like research and development. Product development would be huge. Things like the structure of the business, things like process and systems, things like people. It's a great time to do an audit of your people. It's a great time to really refine your systems and processes, whatever they may be, whatever the business. Those are all things that you could spend every hour on today making better, so that when things loosen up, when you do pull the trigger, when you do go live, you're on rocket fuel instead of playing catch up. To me, that's the best thing that you could do right now in a startup, whether you're starting or operationally. That's the best thing to do. And we talk about this, Michael, as you know, from a business design perspective. That's really what it is. And how are you designing your systems and businesses and people and structure so that when things get better, and they will very shortly, I think, you're ready to go. Don't waste your time right now.
Yeah. And so you talked about that toolkit. Any other essential things that they should be doing? And I also will just remind everyone, if you have questions, throw them in the chat thing, and I'll make sure they're coming through as well.
Yeah, I mean, I think I kind of made some notes, Michael. Obviously, number one, and look, I'm not a tech guy by no means, but you got to go virtual. You've got to bring your company online, whatever that may be. If you're trying to raise money, you want investors to meet you and your team. You want investors to touch your product, to feel your product, to try it. You want them to come to your office. You want them, that's a big part of an investor giving you money. Well, now all of a sudden, for the next immediate future, that on hold. So whatever that entails, make it as virtually dynamic as possible. Ideally with a data room where, they have confidential access and they're doing due diligence, but that's like urgent, numero, uno. If you have employees, obviously that's a very delicate situation right now. There is wage subsidies. I'm hearing some really innovative ideas on sharing labor, where there's companies or startups that have employees, but they've been kind of mothballed, and those employees are going to work somewhere else. At the end of the day, you need to really be adaptable and creative, and now the time more than ever. And take a really good audit on asking yourself, what am I doing, and have a little bit of a contrarian approach to your business right now. Another thing that's really, I think, valuable in the toolkit is some of the best work that we did with True Leaf in particular, but my other businesses, that the best time that we were creative and moved the needle really well is when we had the least amount of resources. When you're under duress and stress from a resource perspective, whether it's money or people, in my opinion, that's when usually the magic happens. Now, it's not fun, but I've seen multiple times where, with True Leaf, for instance, we weren't dealing with COVID, we were dealing with creating a new way to farm. and that's not easy. But we kept, moving the needle and moving the needle. And there was days where I didn't even want to get out of bed. But because we were, very little money. So right now there's very little money. How are you moving the needle and being incredibly creative and resourceful and asking tough questions? Whatever you thought your company was or product was, think about it. Maybe that's different. And really, I think another big nugget would be, as a toolkit right now, this isn't fun. It's very stressful. There's a lot of anxiety. There's a lot of worry, whether you're in a startup or a big business. It's very odd for people to be working like we are right now. I like having hallway discussions with my teams. This is very hard for people. And if you're an entrepreneur in a startup, I cannot stress enough the role of mental health in this whole world right now. I mean, we're going to have a mental health challenge anyway, whether you're an entrepreneur startup or not. But particularly as an entrepreneur, we spend a lot of time at the Entrepreneurship Center and talking about it, and it's a real issue. So just make sure, in the toolkit, you're the most important person in the startup as a founder. Make sure you're looking after yourself. Make sure you're getting sleep. Make sure you're getting nutrition. Make sure you're getting into a rhythm. Because when you're ready, when this thing settles down, investors, they, as one investor told me one time, they bet on the jockey, not the horse, and meaning you. So be ready, be prepared, be physically and mentally ready, and be resilient. And, the world's throwing a lot at us right now, but the ones that are resilient, the ones that stick with it, the ones that hang in there and drive it and persevere, I guarantee you 100% the startups that come out of this post-COVID are going to do extraordinarily and exceptionally well.
That's great. Awesome. All right. Well, we're going to start going. Some questions have started flowing through, so I'll just kind of throw those out to you, Greg, and we'll see your thoughts on them. So Wafa posted, how would you strategize marketing considering the current changes and going on? So you have your company. What should your investment be, knowing that, of course, we're all tight on money? And what should the strategy around marketing be?
Well, I think, obviously marketing is a very generic term. We can waste an awful lot on marketing. So my answer to that would be the consumer. So you're marketing to a consumer, and I'm ambiguous to whatever product or service you folks have, but the marketing to that consumer is going to be very different. Your messaging and your story and your narrative is going to be different from what it was 4 weeks ago. And what the consumer's getting hammered to, by the way. So, I really can't, not knowing your model, sir, on how much money you have to spend. Obviously in times like this, you got to be incredibly smart, incredibly lean, in anything you do, wherever you spend money. But the post-COVID consumer is one that's going to be very caring about your mission, and you want empathetic marketing. You want to understand your social mission. You want to, hopefully you're sustainable. And again, the consumer has overall has been hit really hard. So if you have a premium product, I would think that's going to be challenging in the near term. If you're marketing a premium product to the overall masses, you're going to be challenged there. So that's kind of the marketing messaging and piece. But from a budget point of view, I would watch every penny.
Yeah, awesome. Great advice. Thanks, Greg. Jeff posted, when you are chasing funding, either both dilutive or non-dilutive, how important is fit with of the founder with your corporate culture?
Is that Jeff McKinnon?
Yeah, yeah. Well,
Yeah,
and I've
yeah.
heard that he wasn't so happy with the company he was with before.
That's what you call leading. That's what you call leading the witness, Jeff.
I had to.
Yeah, yeah. Well, that's actually, joking aside, that is a profoundly important question. And and this is actually leads us to a whole other ball of wax. But so as you go looking for money, it's going to be harder. And please don't compromise your values. You know, don't compromise. It's going to be hard. You're going to be trying to get your dream and passion off the ground, and it's going to suscept you to take investment from anybody. And that is a bad deal. And the best advice I could give is stick to your guns and match your values with the investor's values. Because if there's a mismatch, it's usually not a good outcome. And with my current company, I am being extraordinarily surgical about who I ask as angels to come in. And knock on wood, I've been very selective, and that's been great. But I've worked hard at putting my position for that. I've also been in situations where we've raised capital and money from larger investors, and there was a mismatch because my vision was this, and certain other investors' vision was this, and so that's a really delicate balance, particularly post-COVID, and that's a really, Jeff, I appreciate what you're trying to do for the audience here, because it's really key, and because you see a lot of disasters, you see, probably too often the startup founder, just wants capital, and I have a front row seat to a lot of startups right now, and that's what I'm advising. It's just, this is a value decision, and you can really have a hard go. And once that investor's in, you're kind of married, right? So, I always tell people I only want to be married once, and that's currently, you can get into a rough situation. So it's very delicate. So as tough as money's going to come, and it will come, be very, very careful that that's a really good match. Because if your gut says it's not, then I don't know, I'd be extraordinarily cautious.
Excellent. So Charles posted, as a company that's planning to look for investment, let's say 6 months out, what should the approach be for as you're trying to find investors now? Should how should you talk to them? Yourself as an investor, how would you like to be approached by people in this current climate right now, even if they're saying, look, we're looking for 6 months from now, a year from now? Or should you even bother?
Yeah, well, let's play that 6 month period out, which I think because I actually think it's very relevant. And I'm in that situation right now on a number of fronts, both as an investor and raising money. So number one, communicate. And because these potential investors you're talking to, their confidence level is going to continue to go up and up and up and up to a point where they'll be ready, whether it's a high net worth, an angel, whoever. Trust me, the worst is over. So communicate. They are betting on you. So ensure you let them know that you are the smartest person in this industry, from your knowledge point of view. Ensure your financial model and is absolutely rock solid, so that when they're ready, you're not behind the 8 ball. Pay really close into cash. Cash is king anyway, but even more so now. So understand that when you give those investors, as you're waiting for them to be more comfortable, because there's going to be a time when they're going to cut you a check, as long as you have the pillars in place. So that you understand cash flow, you understand your unique value proposition, you understand where the market opportunity is, all the regular pillars that you need to really have your act together on. But be really intelligent and approach on the communication. So it's not, don't bombard them. Don't make it so that when they see the email from Gregg Curwin, that it's like, make it, so be very thoughtful and mindful of how you sequentially get that information to them. You're fishing, And if anybody's ever fished, you're still trying to draw that fish to the hook, and you don't do it by beating them over the head. It sometimes takes a while, but I really believe that if you sequentially go at them really intelligently with the right information at the right time, your success of getting an investment goes way up.
Yeah. And so how would they go about, what's some tips on going about in building a network right now as you're moving towards that kind of 6 months out, a year out? Because, you know, previously you can go to an event and maybe meet someone, but that's, you know, for the time being, that's done. So how, is there any virtual opportunities to start building these connections when you do have a fairly limited network potentially?
Yeah, I mean, that's a really good question. And I think I'm not well versed enough what's going on in Atlantic. I do know that a group of us are right on the cusp of launching a virtual angel network for the ag, food and agri-food and kind of wellness space, based off, we were already working on this pre-COVID, but the new reality is that we're going to accelerate. So whoever wants to stay in touch with me, you can track me down quite easily, either LinkedIn or SMEU Entrepreneurship Center. So that's coming, where we're going to put together a group of angels, and you'll be able to, through our group, get vetted and put your startup into that, and you'll have a virtual opportunity through there. That's in the works, you know, right now. I don't know, anybody can jump in, Jeff, if you know, or anybody else, of a virtual network in Atlantic Canada. I don't think there is. I think a lot of it is going to be just continuing to work the lines and the phones and the Zoom meetings. There are larger angel groups in the country that you could dig deep and find out who are, I know, virtual. So I would start at the angel side. I don't think, if anybody out there knows that, if a NovaCorp has anything like that, but I think what we're seeing, Michael, and you know, the Entrepreneurship Center is helping me with a group of us to get this going. This is now a huge need to, you know, there's a really cool website called Seed Invest. It's in the States. That's very sophisticated, you know, but that's doing exactly that, is connecting capital to good startups through a virtual platform. But there's a gap there, definitely, in Atlantic Canada.
Yeah. Michael, if you don't mind, I just want to ask, is it okay if I just ask Greg, specifically,
sure.
My question was, thank you, appreciate that, Michael. My question specifically was, outside of COVID, before COVID came around, I was always the guy who was kind of corny. Hey, hope this finds you well. Hope you're doing okay. Hope you're healthy and all that kind of stuff. Now that COVID's here, yes, people are expecting that, but we're a month in and this is the quote unquote new normal. So from your perspective, say you were in a position to act as an investor. If somebody's approaching you for the very first time, you've never heard of them before. Do you want that first line in their email to be COVID related, or do you want them to come across as in COVID is just an obstacle that they have to overcome for the moment and it's temporary? How would you want to be approached? Because I'm trying to think of how to formulate my affordable emails. Wow.
Not giving me the easy ones here, are you?
Yeah.
Don't be drunk.
Well, yeah. Well, I think I really can't stand hearing, you know, we're into unprecedented times, and I think we're all tired. And I think where you're hitting on a point that's really valid is, you know, as an entrepreneur in a startup, as a potential investor, I want to see positivity. I want to see get shit done. I want to see go forward, particularly now more than ever. So to your point, I wouldn't open up going, oh, I hope that, you know, these are unprecedented times, and, you know, say, you know what? Press on, move forward. We all have to take that attitude now more than ever. And I think investors, the really good ones and smart ones, will dig that in a very big way. I think that'll get their attention immediately, that this young man or woman really wants to go and get this done. I would take that approach, whether it's email or a phone call. And, you know, we all know COVID's not good, but you know what? We're 4 weeks into this thing, and it's time to build. It's time to get commerce. It's time to get startups. And so I would approach it that way.
So
do you think, Greg, do you think people are more open, like individuals like yourself and Jeff, who've been through it, have been successful, maybe working on stuff now, maybe not? Are you more open to being contacted by people? I know when you and I talk, you have people reaching out to you all the time. But given the current consideration of the current climate, like, you know, I think if some of these individuals go to like a chamber online webinar or even this webinar and they see someone online and they're just like, because you can private message through Zoom, hey, I'd love to chat with you. You think people are more or less open to that right now?
Yeah. You know, I found folks, you know, with, and again, Jeff's on the call, my colleague that we raised a lot of money with Trulieve. We found pre-COVID that a lot of funds, high net worth individuals, investors, people that have a lot of capital, years ago, they were just really about return. But now, before COVID, they were about socially good. So when we raised money for Trulieve, it was always about, yeah, we're going to get you an above average return, but we're going to do something really good for humanity and the environment. Well, post-COVID, that is going to be extraordinarily powerful. That is going to be absolutely on the tips and minds of hopefully every investor, but the vast majority. When they're going to cut a check, they're going to want to know that that's having an impact. Like local was big before, whatever you do, whether you're a local ICT company or whether you're a local food company or whatever was big before, it is going to be incredibly powerful post-COVID. So I think, you know, if you figure out a way to touch the investor emotionally, you'll get them real fast. Their attention is there because they know that we have to be now really intelligent about rebuilding our community. This is a regional thing. This is a Nova Scotian thing. This is, you know, the days of just, you know, and it'll still go on, but investing in some operation over in some other country, that our world just shrunk really, really quickly.
Yeah, for sure it did. There's a question that Scott has posted. He's actually received an offer from one of the Indigenous councils in Northern New Brunswick, and he's looking at working with the COA to begin manufacturing there. So he just wants thoughts on, you know, about working with them. Should you work with them and give up equity or not give up equity, which I think is just a good conversation. You know, regardless of the COVID crisis, what do we think? What should they be considering around when to give up equity? When's the right time? Things like that. And has that changed now because of COVID?
It's a tough question. Obviously, if you're giving up equity, you better have a darn good reason why. You know, that's rule number one. It sounds like if you're partnering with a First Nations, and we, you know, did a lot of work with First Nations, and what I've learned in Atlantic Canada with First Nations and other groups, it just doesn't have to be First Nations, is you really need to make sure that they get it, and that's a minefield. There's not a traditional joint venture. Some of the First Nations are incredibly proficient, dynamic. We can list them here in Atlantic Canada, and there's others that are not as organized. So the risk level I would go is higher. With that, I'm not familiar with which one in Northern New Brunswick, but you know, having said that, the First Nation communities, there's so much opportunity to be innovative there right now with development, whatever it may be. So I can't really give you a distinct right or wrong, yes or no, except that like any type of equity investment or partnership, you better make sure, kind of like capture what we've talked about today, that the values are there, the synergies are there, and really make sure the devil's in the details on that deal, and you could get yourself into a fair bit of trouble.
Yeah, that's what I'm worried about, really. The thing is, I'm from the town's of Dalhousie in Northern New Brunswick.
Yeah.
And the one I referred to in my question there was Listigouche on the Quebec side. They just invested $3 million in a cannabis company. And now the Eel River Bar that is right outside of Dalhousie, when I presented to them about 3 or 4 months ago, I knew most of the people in the council. Had gone to school with a lot of them, played hockey, etc. And so they were very interested in what I'm doing. There's a lot of benefits. The reason I'm talking about Northern New Brunswick is because the COA will go to extreme lengths in terms of financing and non-repayable, and ONB will subsidize wages and real estate. I just put a bid in on an 8,000 square foot warehouse that I'm paying $80,000 for. So, and it's immaculate. So. And
you want to grow marijuana?
No, I'm not growing marijuana. I do glow in the dark rope, and
okay, yeah.
And now that New Brunswick, the entire Maritimes is making all the fishermen put a tracer into their rope. I'm going to start making that type of rope as well. Because
why First Nations then? Why the partnership?
Because to start this capital up, I'm asking for $2 million, and they offered to put the half that I need to come up with, or the 25% that I have to come up with. When I presented them that, they offered to be that part of the capital. Now, we haven't talked about what kind of equity they wanted it at or anything, so.
Well, it sounds like a very good opportunity, not to digress too long on the call here, but if you wanted to connect with us at the Entrepreneurship Center, which is an incredible resource for any entrepreneur startup, by all means, because we're not just here in Halifax. We work with everybody all over Atlantic Canada. So it sounds like, look, you've got opportunity, and we need opportunity, and we need guys like you, getting warehouses and building things.
Yeah, so it's I'll connect with you offline, actually.
Yeah.
And
Scott, Val has posted her contact information. You can just email directly through there, and then we'll set up. We can set up a meeting to go into the detail. Yeah, sounds cool.
Val's email is Matt McPhee.
Oh yeah, that's Val's email, Matt.
Okay, I'll reach out to you, Val.
Because there was Val Caswell's at the beginning of this session. All right, Charles posted another one around CICs. For those that don't know, a CIC, Community Investment Company, is a specific to Nova Scotia. I think there's a couple other provinces that have versions of it, but it's essentially your social enterprise formalized structure here. Do you think, because there's a cap on dividends with CIC, so because it's so important that social give back, you register a CIC, do you think that the cap and stuff actually will deter some investors if you go that route?
I don't have a lot of experience there. I am going to now ask Jeff McKinnon. Did you grab that question?
Yeah, I can. I think the primary difference with the CIC, they're limiting dividends because any early stage, even if you're not a CIC, investors aren't looking for dividends in an angel investment or even a Series A, Series B. They're generally looking for capital appreciation. So from a dividend perspective, I think it's largely irrelevant. CICs tend to be, quasi not-for-profit, right? So the dividend is really designed to keep capital in the business and grow the business, not for people to be taking a bunch of capital out. So if you're looking for a financial return, a CIC wouldn't really be the model you'd be after anyways.
Excellent. Great. Thanks, Jeff. Any other questions from the audience? We're getting near time now. So if you have other questions, now's the time to get them out. I'll throw one more out there, Greg, to you that was submitted before. What are your consideration, because it's going to be tight about gathering debt? I know you mentioned before, the credit unions, things like that. But what about, for startups taking debt at this point? Is that a good idea, as they still believe they have something, you need to finance it? What are your thoughts?
Well, debt in a startup is usually somewhat dangerous, particularly in the early days. And I think, if you're going to go out, and I've been burned by this, by the way. I've been very successful with most of my businesses, and one that your standard major haircut, I took on a lot of debt and I personally guaranteed it. So I don't need you to lead you down the road where that landed. So, personal debt, if you go to a BDC, they do a great $250,000 loan and you got to sign on personally. You got to marry your passion and your dream and your vision to reality. And, I think, again, going back to post-COVID, there'll be debt, but I honestly, everybody has an interpretation, and I go, Jeff, you may have an interpretation of how much debt, but I would keep it maybe in the early days, 20% debt, 80% non-dilutive, equity. It's just super risky. And if you look at most startups, what usually brings them down is they take on various levels of debt and they have almost zero margin of error. And when there's a hiccup or a bump, well, pre-COVID, but with COVID's more than a bump, then they're toast. So there's no right or wrong, but you better be very measured and give yourself a little bit of wiggle room.
Great. All right, it's
I have
yeah.
I have one more question. We've really changed over to putting a lot of our time into development through our product line and developing new products. Would you say should that be very pronounced and reflected in our pitch deck and in our pitch when we're ready to approach investors after this whole thing ends?
Yeah, so be really intelligent about your product development. So have a balance between you show the investors, your phase 1 products, your phase 2 products. Show them that phase 1 is going to actually drive the revenue. So that you've got a secure path. Show phase 2 that whether the unique value and that you understand where the puck is going, where the market's going. But make sure that you show them that you're acutely focused and that you're not all over the map. Ideation is a fantastic thing in product development. We do it all the time. We had a conference call with my team this morning strictly about that matter. And so there's a really, really big balance, particularly if you're talking to an investor where, look, they want to see you sell a product. Look, I'm an ideas guy, as some people know. And I've been fortunate enough to surround myself with people that would tell me no. So be very careful with that. I think there's a very fine balance between focus, go to market, revenue, and oh, by the way, I understand where the puck is going, and this is a really cool product here, but this is how I'm going to sequence it. Did I answer that question okay?
Yeah, definitely. I guess a follow-up to that would be we have kind of a timeline on what we were trying to develop in a certain timeline. And that timeline was basically now. It would be anywhere from like March to August. Would it be valid in showing them that we haven't slowed down at all and that things are consistent and that things are going the way that they need them to go and that we planned on it back in March before we knew all of this was going to happen and that we've stuck to that throughout the duration?
Yeah, just show them you got the bench to do it. Show them that who's doing it. Like, do you have salespeople? It's one thing to say you've got these products and you've got it figured out, but it's a whole other ball of wax to get customer adoption and sales and revenue and moving the product. So if I was an investor, I would say, well, that's really cool. You've got some really great products. How are you moving it? Mm-hmm. Make sure you answer that really clearly.
I guess that would be very difficult. What we're finding very difficult at this time, obviously, is to move that product. And, that's what we're trying to kind of really boost ourselves up. When we do have those conversations, we have to kind of, point them in the direction of looking at some type of consistency or at least some type of growth over this time where that growth is in sales. Would it be better to focus on the development or kind of
Yeah, absolutely. We've talked about that earlier is move the needle. By all means, get the planes lined up on the runway. If you have the time and the focus, get them ready and show the investor that you're on the toes, not on your heels. And from an investment point of view, we all got to show our companies, our employees, our investors that we're on our toes and ready to go. We got to get completely off our heels. I know it's been a rough go the last month, but you clearly have that mentality to go, which is, congratulations, good for you. You got the right approach. So just refine those products and refine your distribution channels so that when, for whatever is a go for you, whatever that looks like, then you're on turbo.
Amazing, Greg. Thank you so much.
Yeah.
Excellent. Any last questions before we call it a session? Good. So if there's no other questions, then please join me in thanking Greg for joining us today to share his wisdom and expertise, and Jeff as well for contributing. And look, for all of you, these are trying times. We're going to continue with these sessions on an ongoing basis. And so please keep tuning in. And remember that we have a slew of coaches available, so you can go to our site, log in, and get yourself a one-on-one session to dig a little deeper. into some of this stuff, and we can go from there. So yeah, thanks for coming, everyone, and we'll see you at the next one. Thanks again, Greg.
See you guys. Thank you.
Thank you.